Good afternoon. This is Sunny Harris. I'm going to be talking today about futures trading and SunnyBands, so you can see how I use them in my own trading. This is my primary trading tool, SunnyBands, and my passion is in helping beginners and intermediate traders. And the talk is for traders who have not yet become wildly successful, or people who have not traded much and want to learn, or those who think futures are risky, and folks who want to improve their trading results. Oh, sounds like the market just closed. It'll probably do that again, so be okay with the noise if it continues. And let's see, what else? I'm gonna get my arrow working here. So first, we have to talk about the disclaimer, which is basically there's risk of loss in trading anything, and you can and will at times lose everything you've got invested in the markets. And hypothetical performance does not necessarily guarantee futures performance. So please read the disclaimer carefully before you decide to do anything with respect to trading or any of the things that I have to offer you. So many folks have started trading their investment portfolios with a few choice stocks for your 401k or whatever sort of retirement plans you have. But fewer people have traded futures, since the word on the street is that futures are too risky. So hopefully today this talk will help you dispel any concerns that you might have, and will teach you how I use my SunnyBands indicator to trade futures, stocks, and crypto for my own account. I am a real trader, and I've been trading for 41 years. I trade both futures and stocks, and I do not trade options. The only thing I know how to do with options is to lose. So that's not something I do. Yes, they will tell you, but you can only lose just what you put in. You put $2,000 in options, and that's all you can lose. Problem with options to me is that you can lose it every time, or at least I do. So I'm going to tell you a little bit about my history, and I'm going to also show you exactly how I trade. So what I trade is primarily the S&P futures contracts, although I do trade stocks. One of my favorites is Tesla, so every time it goes down I buy more. And I do trade some cryptos. But my futures, I trade on 1 and 5 minute charts. So it's really fast, but it's where I have found that there's the most profit potential for me. I do have, as I said, some long-term stock holdings, which means to me a week or more, maybe a month or more. And I do trade crypto. But again, that's another long-term kind of thing. I have 2 indicators that I use, and both of these, now, I'll tell you in a few minutes, I'm a mathematician and a programmer. So I have programmed these things myself. And here's what they look like. So you can see on Bitcoin, this is yesterday's chart, so I don't know what it did today yet. But this is Bitcoin, and you can see the channel that's built around price is what I call SunnyBands. And it's mathematically built off of the gold and purple lines in the middle. And those are called my dynamic moving average, DMA. That's the dynamic moving average. And what it does, why it's so unique, is that it does not whipsaw back and forth like an exponential moving average or even like a simple moving average. I've designed it so that it slows down and gets out of the way when the market's going sideways. And when gold is on top, the market is, from a macro viewpoint, bullish, excuse me. So gold on top is bullish. And if purple's on top, which you can see back here, can everybody see my arrow, my mouse? And where's the chat, David? Let's see the chat. Hang on just a second while I get the chat one. So yes, I guess they can see my mouse. Okay. Yep. So purple on top tells me the market's going down. Gold on top tells me the market's going up. Now I do have some more rules that I'm going to tell you about in just a little bit to make this more profitable. There's the arrow. So the kind of insight that I have for the markets is available to you free. And all you have to do is sign up for my free Sunday night sunny side of the street. I mail it out every Sunday night, giving the pictures, the charts of the SunnyBands and the dynamic moving average, and a VantagePoint chart that tells their overview of the markets, and my commentary on where I think the market's going. If you can't find, but these slides have hyperlinks on them. So when David publishes them after the recording, you'll be able to click on the hyperlinks. But you can always email me. If you can't figure out how to get there from the hyperlinks, you can always email me anytime, sunny@moneymentor.com. My website is moneymentor.com. So just sunny@moneymentor.com. Or you can click obviously on the hyperlinks above after David publishes these slides. So just quickly, I've been rated twice as #1 trader by Stark Research. And to do that, I was using my SunnyBands and my dynamic moving average. That's exactly what I've been using for the last 41 years. So here's my trading company was called Rourke International after Howard Rourke in The Fountainhead by Ayn Rand. So you can see right there that I was not only #1 on top, but I was way above 365%, which was way above the next person who was 142. So that's that. And then my credentials. So I have 3 degrees in mathematics and 1 in photography, and I have a degree in computer science. I've been programming for 52 years. It tells you how old I am. And 41 years I've been trading. I started out as a systems programmer for Lockheed up in Sunnyvale. And I founded with some friends, I founded a company called ISCO, which was the world's leader in computer graphics software, which created, among other things, Harvard Graphics. I retired when I was 30 years old. I sold my stock in the company and retired. And I did what I thought was the smart thing. I gave my millions to money managers. So that, I mean, I didn't know anything about economics or trading or the stock market or anything. So I gave them my money, which turned out to be a really bad idea because it took them 3 weeks to lose $75,000, which in 1980 was a lot of money. It's not a fun thing to lose $75,000 even now. So I decided, you know what? I can do that badly by my own. I don't need them to do that badly. So I taught myself to trade through reading 117 books on the subject. And now I've read and have in my library 733 books on trading. And I did not enter a single trade for the first year of watching the market. I learned and learned and read and learned everything I could possibly learn. And I also published a little magazine, monthly magazine for 8 years called Traders Catalog and Resource Guide. And there are people who still have that magazine in their library, interestingly enough. And I've also written articles for Stocks and Commodities magazine, as well as many others. I'll show you in just a few seconds. I've written 5 best-selling books on trading. And I am now working on, and then I wrote Get Going Vegan with my friend, the actress Linda Blair of Exorcist fame. And I'm now working on one called Easy Language OOEL Made Easy with my friend Sam Tennis. And here are the magazines I've written articles for, lots of them. And let's see. Okay, there's my books, so you can see those. And the magazine, and Going Vegan with Linda. And this is the one that I'm currently working on. So I've been in the top 10 consultants in Stocks and Commodities magazine. I've been in the top 10 courses and seminars at Stocks and Commodities magazine. I told you I was rated top trader by Stark Research, and I belong to a number of trading organizations. As a consultant, I've been consistently rated in the top 10. There was #3. And here's my page of quips and quotes. If you'll go on Money Mentor all the way to the right to where it says quips, click on that. And there are hundreds, there are hundreds of quotes in here about my indicators and my books and my consulting and everything you want to know. I like this second one. Thanks very much. I do like hearing from you. Thanks to SunnyBands, I now have a net worth of above 1.25 million from Don. And he started 3 years before that with a $25,000 account and used SunnyBands to make over 1.25 million. He now has over 2 million in that same account. I have a Facebook page where I post a chart of the market and say what I think it's going to do. That's always free. And then if you'll go to Sunny Side of the Street, click there, and you have to opt in. I can't just send it to you just because I feel like it. So if you'll opt in there, I'll send you that. And it's of note to tell you that I've called for rising markets when everyone else was looking for a crash, like recently. And I've called for corrections when everybody else was still buying at the top. So I do speak my mind, and I am opinionated, and you're welcome to those opinions for free. And I completely revised the Money Mentor, which has been on the web since 1995. And I'd like for you to come by and take a look at moneymentor.com and see what I've done to my website. Okay, how do you make a six-figure income? I saw one of the talks was about making a six-figure income. So I decided to tell you exactly how to do that. 120,000 a year, for instance, is a six-figure income. If you divide that by the number of months, you get that you need to make 10,000 a month to achieve that. If you divide that by the 20 trading days, you see that you only need to make $500 a day trading. And I typically make 5 or more trades a day. And if you make 5 trades at $100 each, which is nothing on the E-mini, then you make 120 grand a year. So let's talk about futures for just a minute. What are futures? They're also called derivatives because their value is derived, therefore derivative, from the underlying whatever it is. So corn, if you buy bushels and bushels of corn, that's the underlying. But if you buy a futures contract on corn, that's the derivative. The E-mini, let me back up a second. The E-mini, for instance, is not a physical derivative. It's not corn or soybeans or wheat or cattle. It's actually a financial contract where you are making money if you believe it's going down and making money if you believe it's going up, and it actually does one of those two things as you are predicting. So it's a financial contract. Futures are not like stocks in some ways, and they are like stocks in other ways. If you own a stock, for instance, you own a small piece of a real company and you can hold on to it forever, and hopefully it will go up at some point in time. It doesn't necessarily mean it's going to go up. There are obviously stocks that, like IPOs, they go up really fast in the first few days and then down for a while. But if you own a real company, you can bet on the fact that at some point in the future, it's going to be up. Stocks don't usually drop to zero. Some of them do, but most of them don't. Most of them either go sideways for a while or go up for a while or something, but I don't short stocks. Now, if you trade futures, you're buying a contract to take delivery of a commodity at a later date. So if you buy corn futures, you're telling the market that in 3 months' time, when it expires, you want to take delivery of that contract. Well, you don't really want to do that, but that's the theory behind it. So you obviously could lose more money than your initial investment if you are buying and the commodity goes down. If you buy corn expecting that we're going to have bad weather and therefore corn's going to become more expensive, and instead it goes the other direction, you could lose more than what you initially put into it. Trading on margin is what futures are all about. You can buy stocks, and if you want to set up a margin account and the stock is a borrowable stock, then you can short it. But I don't like to do that. I just don't like to borrow money to short a stock. So I'll short futures all the time, but not stocks. So you will have a margin account if you trade futures because you are borrowing money from the exchange if you're going short. Well, if you're going long too. So the question then is, what is shorting? Well, long is buying in the hopes that whatever you got will go up and then you can profit from the price going up. Short, on the other hand, is selling something you don't own on the promise that you will buy it back later and you're hoping it will go down. And when you first start trading, you wonder, why am I selling something I don't own in order to buy it back later? It's very curious. So hang on one second. Pardon me. Okay, so this is a chart of a long trade. This one, most of my charts are done with TradeStation. This one's a MetaStock chart. You can see that SunnyBands is also available for MetaStock now. This is a new addition. So we pick a low right here. Let's say you buy here and you hang on while it goes up and down and up and down. And then finally it goes up. And this is Tesla, and you can see that it went significantly down after that. But if you look at it from where you bought it, it's a nice clear path up. These are two short trades. One on Tesla, you would obviously want to go short here and then buy back at this local bottom. And you could short up at the top of Tesla. And right now it's down in here. It's recovered some, but it's still down. So let's put the Dow on a chart. This is the Dow Jones Industrial Average, 30 industrial stocks. And this is a daily chart. You can see it for like about 6 months worth of data here. And I say, why the quotes? Because you really can't trade a futures contract on the Dow. You can now, actually. There's something called the YM, which you can trade a futures contract on. But on the index itself, you cannot trade it because it's not a futures contract. So to go long and short like that, you would need a tradable instrument. And what I trade again is the E-mini. So I'm going to show you a picture of that. Or corn, which is C, or soybeans, which is S, or cotton, which I don't know what that symbol is because I don't trade cotton. So futures contracts expire on a regular interval, often every 3 months. And there's a reason behind that. And I'll tell you that in just a minute. But to view a future symbol on a chart, you need to know when it expires, and you need to use that code for the month and year. So for instance, here are some from the Chicago Mercantile Exchange, the CME. Here are some futures contracts. So Australian dollar, HMUZ. And I'll show you what these mean in just a second. The symbol is AD for Australian dollar. And then HMUZ tells you which month it expires in. And then you have to tell it the year after that. So what that looks like, well, here's something from the Money Mentor. Let me just diverge a second. From Money Mentor, you'll see the charts of the expirations and the symbols. So go to moneymentor.com, click on reference, and there you are. So the reason for this is this. They expire every 3 months and sometimes more often depending on the contract, because futures used to be crops and animals. And crops and animals come to market every 3 months or so. Animals were born and matured every 3 months. Crops were farmed and then planted and then, what do you call that when you harvest them? Yeah. And so they come to market every 3 months. The futures expiration month codes are this, and the H stands for March, M stands for June, U stands for September, and Z stands for December. So the most important to me as a futures trader are the HMUZ, which I memorized years and years ago. So let's look at the ES again for a second. Current expiration month is December because September is already expired and gone. So December is the current month, and Z is for December. Year is 2021. So we construct ES, Z for December, and 21 for the year. ES is the contract, Z is the expiration month, and 21 is the year. And here is a chart of the ESZ21, the E-mini for December. You see over here to the left how thin the trading is. That's because at this point in time, they weren't trading that as the front month. They didn't trade the front month until along in here when the trading gets actually more robust. So we call this the front month. The December's contract is currently the front month, meaning the one that we are currently trading. So what does delivery mean? Well, in the old days, the exchanges actually physically delivered the contract to, or the commodity to your doorstep, and they still do for some contracts. But for others, they simply cash you out of your position. Whether you win or lose, you will get cashed out at expiration. Imagine a herd of live cattle showing up on your doorstep or coming down the street. That's what delivery means. Now let's talk for a minute about rollover and expiration. You must remember these dates so that you don't take delivery of the cattle or whatever. I don't think they deliver cattle anymore, but that's the idea anyway. So expiration is the third Friday of the third month, and each expiration month is March, June, September, and December. The third Friday of the third month isn't exactly the most important date to remember, though. Rollover is on the Thursday of the prior week. So everybody who's anybody trading will roll over their contracts into the next contract. So I'm going to right now I'm with the December contract, the Z contract, and when that Thursday in December comes, I'll be going into the March contract. So it'll be 22 will be the year, and it'll be H for March. So ESH 22 will be the next contract I roll over into. So traders roll over on this Thursday and begin trading the front month. So you want to do that too if you're trading futures. I have this on my calendar on my phone, and I have it on an alarm. And what you do when that time comes is you simply close the contract you're in and you buy or sell the next one. So for instance, that's the calendar on my phone. It pops up and says Thursday the 10th, so 1, 2, 3 Fridays shows you the 18th. The 10th is the Thursday of the week prior. So that's when the June contract expired. Let's look at technical analysis of stocks and commodities. This is usually right in the back. It's a futures liquidity table, and it shows you which are the most traded contracts and how they compare to other contracts. So we can't really read it on this scan, but the top one is the S&P 500. It's usually the most liquid contract. So that's what I trade, and that's why I trade it. The 10-year T-note is the next contract down, which has got a lot of liquidity. And then the NASDAQ E-mini is down at 7th for those of you who are interested in trading the NQ. YM, the Dow, is down at 19th. I would not trade the YM contract because of that reason. Just remember, don't buy something you can't sell. So if you're buying a contract and you see it's going up and then changes direction, goes down, you want to get out of that contract and take profits. If it's a thinly traded contract, you're not going to be able to get out at the price you wanted to get out at. And there's the liquidity table. So how does the ES compare to the Dow and the NQ, which is the NASDAQ? Here's a chart of all three on one chart. So you see the E-mini and the Dow and the NASDAQ, all three stacked on top. Here on, what is that? September the 3rd, you can see that they all topped at about the same time. Topped up, the NASDAQ topped a couple of days later. Here you can see a low, although on the Dow, the low was not the same low as on the E-mini, but it was the same low on the NASDAQ. And the recent highs were all three pretty much in a line there. When trading stocks, pardon me, you pay the values shown on the quote. So for instance, Google yesterday was $29.70 per share. Microsoft was $3.36 per share. And unless you have a margin account where you're trading on borrowed money, there's no leverage. So you pay the price that you see per share. Futures, however, are highly leveraged. So here's an example of futures margin rates. I have a little application on TradeStation called Futures Margin Trading app. TA for trading app. And you can see that the E-mini, the margin yesterday was $12,650. So that means for every contract you trade, you have to have $12,650 in your account. In my book, you want to have more than that much in there, because if you only have 12,650 and your first tick is a down tick and you lose money, they're going to call you with a margin call. So the S&P E-minis trading at 4,685 yesterday, and there are 500 stocks in the index. 500 times 4685 is 2,000,003. So for $12,650, you're going to be controlling over $2 million worth of a contract. That means you're trading 0.6%. You just have to put 0.6% up in order to control that contract. It's really steep leverage, but it gives you a lot of profit potential. People think that since futures are leveraged, you can lose all your money. Since you're so highly leveraged, you could lose a lot. But if you don't have enough money in your account to cover that loss I just mentioned, you will have a margin call. And what happens with that one is you could lose more than is in your account. So I always trade with double the margin amount in my account. If I've got $25,000 in my account, I will trade one contract. So margin call is where your broker's going to call you or send you a notice by email and tell you that you have a margin call, and you have 24 hours to bring the account back over the margin rate. So if you're trading with just 12,650 in that account, you're going to have to bring it back up over that margin rate within 24 hours. And they want that right then, and they mean it. Otherwise, they'll close your account and they won't open it back up again. So if you're sitting on a losing trade, this could amount to a lot of money. The market's going down sharply against you, like in the COVID crash, you could lose more than you have in your account. And that's why people think it's risky. So now let's talk about how much money can I make. The E-mini trades at $12.50 a tick when there's 4 ticks, so $50 a point, $12.50, $50 a point. And that means if you're trading at the 46.85 of yesterday, and it goes to 46.86, so it's let's see where it is today. Last is 46.99. So it went from 46.85 yesterday to 46.99 today. If it just goes up 1 point, we make $50 for one contract. Now, what does short on a trade, on a stock look like? This is, I pick the top, I pick the bottom, and that's the short trade. From here to here, we've got a short trade. So that's 300 points on Google. You put $1,200 into it, 21 days, you make $12,000 on that short trade. Let's look at the same kind of example on the E-mini. Here's the same period of time. You see we picked the top, we picked the bottom, assuming we can get ideal turning points, which we can't. And I'll talk to you about that in a little bit. 275 points, a little bit less, but this time 275 times 50, instead of $1,200, you've made $13,000 in 21 days on $12,000. That's why I trade the E-mini. So does the S&P 500 ever go to zero? It hasn't in the 41 years I've been trading. It just doesn't drop to zero. Yes, it can go down sharply, but it's never gone to zero. What if the world came to an end while you're in a trade? Well, then you're going to have worse problems than that. The biggest point drop I've ever experienced was the 1,186 points during the COVID crash. Now, that's the biggest point drop, not the biggest percentage drop. Percentage-wise, I was short in, when did the market crash? In 86? Is that right? 87. Market crashed then, and that was probably the biggest percentage I've experienced. And as I say, I was short going into that crash. I went long on the Tuesday after the crash and bought everything I could get my hands on. So that was a really good trade. The thing is, you got to remember, You can't hold on to a futures trade waiting for it to rebound. While you can do that with a stock, you can't do it for a futures contract. Why not? Because it expires every 3 months. So every 3 months, you're going to have to get out of that contract, whether you like it or not, whether you're profitable or not. You've got to get out of that contract. So you can't hold it forever. What if the rebound, for instance, took a year and you've got to get rid of that contract every 3 months? So you're not going to be able to hold it until it comes back. There's also something called trading limits in trading futures. This is what the exchanges put in place to avoid crashes as much as possible. If you look it up on Investopedia, you'll see that a trading limit, there are trading limits called limit up, which is the maximum amount of prices permitted to increase during a single trading day. Limit down is the maximum permitted price to decline over a single trading day. So trading limits are examples of circuit breakers. And market went limit down in 1987 when it crashed. So limit down is kind of a fun thing. It means you can't get in or out of your trade at that point because the market is essentially closed for whatever the circuit breaker limits are. And you can click on this in the slides once they're published, and you can see what the circuit breakers are. There's something at 30 minutes and something in an hour, and I don't know, several things like that, where they tell you exactly how long the market's going to be closed during that limit, usually limit down. I haven't really experienced many limit ups, although you might experience that in something like soybeans or corn, but not in the E-mini. So now that you know it's risky, I'm going to show you how I trade. And I've been doing it, as I said, for 41 years. And I even sell you my system and teach you exactly how I trade it. And it's the same one that made me #1 trader years ago. This is how I personally trade. The first thing I do is I put attractors on the chart. And attractors to me means horizontal lines, trend lines, moving averages, Fibonacci lines, things that tend to attract price, and it's called like reversion to the mean. So it means that price will come and go back to these lines. And I coined this term to mean all kinds of support and resistance, including moving averages. The next thing I put on my charts is my SunnyBands. Now you're going to say, why SunnyBands? Why don't you use Bollinger Bands? And I don't use Bollinger Bands because I don't know how to trade them very well. They're kind of nebulous in my book. SunnyBands are, yes, a set of bands, yes, a set of moving averages. While Bollinger Bands are exponential moving averages, SunnyBands uses my dynamic moving average, which calculates its own inputs based on the speed of the market. And Bollinger Bands uses exponentials, and he also uses standard deviation to create his bands, while I use average true range. Standard deviations tell you where the market should go, and average true range tell you where the market is going. So as I said, it's based on the purple and gold lines in the middle, the dynamic moving average. Here's how I trade attractors. There's a 15-minute chart of the E-mini yesterday, and that's kind of meaningless without any indicators on the chart. So the first thing I do is draw a horizontal line at the high, and I can see, okay, now I've got an attractor. Price should go to that horizontal line. Price tends to go where it's been, and it tends to explore extremes. Next, I put 2 more attractors, and one is under, see, there's a high here and a low here, low there. Here, price dips below it and touches it again, touches it again, touches it again. Over here, you can see how it touches it again and again. So I kind of blur my eyes when I'm putting a horizontal line on there and look at the places that price has repeated itself. So SunnyBands, now I put those on the chart, and you go, well, that's not readable. How can I tell anything from that? That's just a bunch of jumbled lines. So let's spread it out a little bit. This is the same chart spread out so we can see it better. I still don't trade with it in this view. I go to this view, which is, I can see, I've got one of my indicators on here called day sessions. So you can see the day sessions for me are red and blue candles. Okay, so this is a day session. In the night session, or some people call it the Globex or after hours session, is in magenta and light green. So here's the night session. You can see that happening. Look where it hit that attractor that I drew back on the daily chart. I mean, on the squeezed up chart. Sorry, it wasn't daily. Squeezed up chart. So this is the same attractor, and you can see here price hits it, price hits it, price hits it again, and hits it again, and bounces off. Here it comes down below it, comes back and hits it again, and then takes off. And today it took off even higher. So that's day sessions. This is the view I look at. I can see that gold was on top for this entire ride up to here. Purple went on top, but one of my trading rules is if the angle of this DMA, my dynamic moving average, is flat, I do nothing. That's not a good trade to me when that dynamic moving average is flat. Here it takes off again, we go long, and it hits the DMA, and now we're out of that contract, and purple's on top, so we go short. Here it is horizontal again. I do nothing during horizontal periods because there's no information. There's no angle telling me which direction it's going. And you can see it prints values on here. Mid angle is 4 degrees. See down at the bottom, it's got text telling me what all the values are. If the angle of the midline is less than 5 degrees, either -5 for down or +5 for up, that's a do nothing trade to me. Then I've got something else. Well, let's talk about the DMA crossover first. Sorry, before I get to the DMA-H. The DMA crossover is my macro clue. Okay, it's not enough, but it gives me an overall view of whether the market is long or short, in my opinion. So I created the SunnyBands, which is faster than the DMA. And then after that, I created the DMA histogram, which is even yet that much more precise. And I'll show you that in just a second. Okay. At the bottom of the chart, you see red vertical lines and gold vertical lines that look kind of greenish on this, in this view, but they're gold. And you can see the red ones show me where short trades are, and it tends to pick things right at the top. And gold lines show me that the market's moving up, and when they turn red, I go short again. I also have Fibonacci retracements on this chart, and you can see here that price went right up to this line I had drawn up on the chart. This is a daily chart, just so you know. So I look at the DMA-H turns, and I've got them marked here with vertical lines, short, long, short, long, short again on that chart. That's a 5-minute chart, which is what I actually trade, is 5-minute charts. Again, when it's horizontal, I'm going to stay with whatever I was in. Stay with whatever's in. Horizontal lines again, no angle. And really, that's all there is to it. I look at the attractors. I also look at VantagePoint. Every night, I look at the VantagePoint software, which is an artificial intelligence predictor. They try to tell you where the market's going tomorrow, plus or minus a couple of days. So they don't tell you exactly tomorrow, but they do tell you over the moving average of the next 3 days will be, and then they give you values. So I look at that every night, and then I post what I see on Money Mentor. So if you scroll down on the front page of Money Mentor, you'll see every day's VantagePoint prediction. I study the DMA, dynamic moving average, and the SunnyBands. And then I trade on the 1 and 5-minute charts, and I may trade many times a day. With equities, of course, I buy and hold for weeks to months, but on the E-mini, I'm selling and buying, selling and buying. Next step to this is I add a 5-minute chart to the 1-minute chart to show me the quote long-term trend. So if a 1-minute chart is what I'm trading, the 5-minute chart is the long term. Now, this is kind of tricky to put 2 of the indicators on one chart. So if you go to my YouTube channel, just go to YouTube and put in Sunny Harris and you'll find my stuff. So I put 2 SunnyBands with 2 different data streams on a single chart. And there's the YouTube channel. You can see the videos, and I'm adding to them all the time. And here's what it looks like with 2 SunnyBands on 2 different time frames. So again, I've got the 1-minute chart, which is the candles you see. The 5-minute chart's hidden down here at the bottom. I could have made it invisible, but it's down here at the bottom is the 5-minute chart hidden. And you'll see that the SunnyBands, the dark green SunnyBands, come up and hit the light green, which is the 5-minute. And then they go down and hit the 5-minute. And then the 1-minute SunnyBands comes down again and hits the 5-minute. So you can see that it's trading within, the SunnyBands are trading within the SunnyBands. I love to look at them on that view. This also works on longer term frames. So here's the daily chart of the E-mini. You can see that it picks great trades, even when the market's going steadily up. But here in September is where we had our October crash. So October this year was in September. That was, I think that was 1,800 points for that. And it works on any symbol and any time frame. So here's Google. You can see SunnyBands and the DMA working on Google. Again, Tesla. You can see that right here's where you go short Tesla. Comes up on a blue candle, which is bullish, touches the top SunnyBand, retreats from the top SunnyBand on red candles. We know to go short. Before I was shorting Tesla, but I knew to take profits. So if you take profits up here on the short signal, you get out. When it comes down and touches the bottom SunnyBand, you go long, or I go long again. And that's where I bought. And today it's up from there. So the last piece is this puzzle. And I tend to go through slides really fast. So get your questions ready. Because even though I had enough slides for an hour and a half, I only have 10 left at this point. So get your questions ready so we can chat. Oh, somebody, Brian, says SunnyBands, Bollinger Bands, and Keltner channels together. Sort of. But I don't use the same formulas they use at all. So they're not the same. Every night before I put away my trading tools and go to bed, I consult VantagePoint to see where their clue is for tomorrow's market. The gray bar on the right of the VantagePoint chart shows tomorrow's forecast. And here, for instance, was yesterday's VantagePoint prediction. So it was saying that the market would go deeper and also up. It doesn't make new highs on their prediction yet, which it didn't today, but it does show just exactly what happened today. Their predictions are, according to my diagnostics, I reviewed the product at one point and found that they were 84% correct. Correct 84% of the time. So here's what I do. I look at VantagePoint, I draw the attractors, I place SunnyBands on the charts, I put the DMA histogram on the charts, and then I read the signals. Take trades and make money. That's all there is to it. Can't be any more disciplined than that. So if you would please come by moneymentor.com. It's been over a month now, but I relaunched the new and redesigned, reprogrammed moneymentor.com. It's been active on the web since 1995, and I've changed it many times to keep it updated and current. It seriously needed an overhaul. I was using tables before, and they've been deprecated, so you really can't use tables very much because they're not responsive very much. They are responsive, but you've got to scroll if you do it right. So you'd be amazed how many trading tools and resources are available there. I put everything I know on Money Mentor and in the books I write. So please drop by. Here's what it looks like now, and you can see that you can go home here. There are drop-down menus under all these things that have the little triangle on them. Books and articles. I'm busy linking to the bookstore. I'm linking all the Amazon books that I know that are trading related. There's all kinds of resources under here with reference and resources and quips and quotes. You can be a member of Money Mentor and have access to the private areas if you want to sign up. And of course, there's a sitemap. All of the products that I have were developed for my own use in my own trading. So if you want to purchase any of them, I'm going to give a discount at the end here for today's viewers only. And I didn't develop them to sell them. That was not my goal. My overall goal is to be a profitable trader. My income for 41 years has been through trading, not through selling indicators. I'd be happy to show you exactly how I use them. It's free training to get you used to the products. And you can go to Money Mentor order form if you'd like to order them. And I don't hold anything back. I tell you exactly what I do to use them. And there's the order form. You can see I do consulting and coaching. I've got a correspondence course and I sell indicators. So for today's viewers, I've got, if you want to order before the end of the week, for Friday afternoon, Friday night, I'm giving 20% off on all of my indicators and strategies. Anything you want, 20% off. Or if you wait till the end of November, you can have 10% off. And that includes my consulting and mentoring time. You can get discounts on even on that. Consulting includes programming. If you want a free day trial, if you have TradeStation or multi-charts, either one, I don't have a free trial yet for Metastock. I will. But if you want a free 7-day trial, either email me or give me a call. And of course, I'll need your customer number, your email, and your phone number at the very least. So go to the membership, sign in on the membership, and under the comments, put that you want a 7-day free trial and look at the products page so that you can tell me what it is you'd like a free trial of. And that comes with free consulting to help you learn to use it. So I'm going to take this time now to talk to attendees through the chats to see if I can answer any questions before my time is up. And does anybody have purple, green, and gold? What does NOLA colors mean? New Orleans colors. Oh my goodness. That's funny. And then the comments above that are for Marina. And I'm not Marina, so if you want to ask me any questions, I'm going to put questions on the chat. So if anybody's still there, pop a question over to me. I'll be happy to answer. There's no such thing as a stupid question. And I don't see any coming up, so I guess everybody left. Although I do see a membership already on my email, so I appreciate that. And thank you very much for coming. Thank you, David, for hosting this. Oops, it says Metastock. I'm so sorry. And thank you for attending. And here's all my contact information.
Now there's a couple of questions coming in.
Oh, thank you, David. What's the best trading advice you can give? To tell you the truth, the best trading advice is don't do it. It is very risky to trade. You can lose all your money, and 90% of the people who trade do lose their money. So the best trading advice would be to read 100 and whatever I said books before you ever get started. Study, study, study. My tagline is education is not expensive. Lack of education is. The best time for me to trade, I trade from 7 o'clock in the morning. I avoid the open. I don't like the open. It's too volatile. So I trade from 7 a.m. until 7 p.m. Monday through Thursday. On Friday, it closes at 3 p.m. California time. So I'm out at 3 p.m. On Sunday, it starts trading again at 3 p.m. and I'm back in that. I work from 7 o'clock every morning to 9 o'clock every night. When I'm writing this new book with Sam Tennis, we work on Tuesdays and Thursday nights for 3 hours. We work from actually 4 hours. We work from 4 to 9 every Tuesday and Thursday, and some Saturdays. I do mostly trade futures, although I have a large stock portfolio too, but I don't trade them as much as I hold them. So I did get out in September, sold everything. I told everybody in my newsletter, Sunny Side of the Street, I told them I'm getting out, I'm selling everything I have and waiting. And then when September went down and started back up again, I rebought everything. When Tesla went down the last several days, when he asked his followings if they thought that he should sell 10% of his stock, I got out of Tesla, took profits, and waited aside, and just waited. And as soon as it got to a low, which it did day before yesterday, which would be Friday, I started buying again. Thanks a lot. I learned a bunch as I knew nothing about futures. That's wonderful, Roy. Thank you very much for that comment. So if you want to know more about futures, give me a call. Could you please repeat your free weekly article? Sure. It's Sunny Side of the Street. Go to moneymentor.com, pull down where it says articles, I think. Let's see real quick. Where's Money Mentor? Here we go. Yeah, books and articles, Sunny Side of the Street. So go to moneymentor.com, click on books and articles and pull down to Sunny Side of the Street. That's my free Sunday night newsletter. And let me real quick. So Sunny Side of the Street is right there under books and articles. See that? Sunny Side of the Street. And if you want to listen to the music, it plays Sunny Side of the Street. So that's what that is. You fill out the form. Here are all the old ones. I give the archives right here so you can see what I've said every week. Submit the form. You do have to type the word yes in here and fill out everything that shows in red. All the red things. And then you submit the request and it will ask you for a confirmation code in all caps. So be sure you put all caps on there. Oh, since I am awake most of the time, trading and writing books, and it's my nature. I don't do it because I have to. I do it because I'm thrilled and I enjoy it. I enjoy every minute of trading and teaching other people to trade. So you can call me any day, anytime. If you're working through the week and you want to call me on Saturday or Sunday, that's my cell number. Just try to remember that I don't like to get up at the crack of dawn. So Pacific time. I'm in California. All right. Thank you so very much. There's my website. There's my email. And I don't see any more questions yet. Mostly for futures. What's the, oh, well, okay. The best time I did answer that, 7 a.m. to 7 p.m. Thank you very much, David. Thank you, audience, for attending. I really appreciate your time.